Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. Great. So excited to kick off another show. I just had an hour session with another great investor, but excited to get Richie here. Richie is at IA Capital. We've gotten to spend some time together a couple times in person, and really excited to finally get you on the show. And I know you're super busy, so really appreciate you making time for me and the community. And I think there's a lot of good lessons that you can share with the community about your career and just breaking into VC, and then also developing ourselves as a mature VC as well.
Yeah, that's great. Super excited to be on the show. Been a watcher for many months now, as I was sort of navigating sort of the venture world, sort of coming out of college. And yeah, excited to connect again and share my experiences.
So let's unpack it a little bit. So let's talk about where you grew up, your career, what your parents did, and how that maybe formed your educational decisions, and then really how that got you into your first role into venture capital, and then we can just kind of take it from there.
Yeah, sure. Happy to walk through there. So I grew up in New Jersey. I think what's sort of interesting place to start is, I was really a theater kid in high school. So, was very much set on that track. My first year of college, actually, didn't go to a conservatory, but went to a similar environment. I think a really telling moment for me was sort of my summer heading into college. I really wanted to do a play over the summer, and it's hard to find these roles as a young actor, and so I ended up putting on a show with a bunch of my friends. Went to the local community theater, begged them to let me use their space, and got my friends together, and by the end of that, I really realized that what was exciting about that was less the performing and the acting, but was really making the thing come to life. And so I think that really set me on a path in college to pursue entrepreneurship. And sort of by the end, I think the investing part became very attractive. Naturally I found myself really curious about venture sort of by my senior year, and sort of just pursued that, pretty thoroughly. So.
And real quick, what's conservatory? Is that like Catholic school or?
So I meant sort of like a conservatory program. So, if you're, interested in pursuing acting, you can sort of, try to get an agent and make it on Broadway or on the show or whatever, or the other route is you can do, sort of very intense training. So.
Yeah. Okay. So conservatory is just kind of the career pathway into becoming an actor.
Yeah. I'd say it's a route. You might think of like the equivalent as like an accelerator for a startup, right?
Oh, interesting. Okay. So they got
I think that's
programs that kind of help you go through that. I didn't even know that. It's interesting. Like when I went to LA, like about a year ago, and some of the people that were the wait staff, I met this one guy, really interesting guy. He was a waiter, but he used to work at like Bain Consulting in like Boston. And he had like, really good education, was like a really well-paid strategy consultant. And he was just really unhappy. So he really wanted to be an actor. So kind of followed that, some of us do this New York dream, if you can make it in New York, you can make it anywhere. But a lot of people want to go to LA to pursue that acting career. So he moved to LA and really was starting from the ground up. He was waiting at restaurants and was really focusing, trying to make it big, like maybe get in a movie or something like that. But like, did you ever think about that? Like just going into movies, or was it straight up like Broadway and plays?
Yeah, I mean, so like in high school, had a lot of exposure to, really to sort of theater, right? So both plays and musicals. So, New York was sort of right on my doorstep, so it was an obvious option. But later on, became more interested in film as well.
Mm-hmm.
But I'd say actually, again, tying back to venture, right?
Mm-hmm.
Like 10 years ago, if I wanted to do startup investing, I might want to go to the Bay Area, right? But,
Yeah.
I think today there's really exciting ecosystems. I mean, in New York, obviously,
Mm-hmm.
but in other cities like Chicago and
Yeah.
Miami, I think there's increasingly attractive
Mm-hmm.
ecosystems. So I would say I think New York or LA would have been equal
Mm-hmm.
options. It, you know.
Yeah. So you had a passion for like more of the musicals in theater.
Yeah, I mean,
Mm-hmm.
I absolutely. So, in high school, I was also, I was studying piano, like learning to
Yeah.
compose a little bit. So, it was all this creative stuff kind
Mm-hmm.
of going on, and
Yeah.
yeah, I mean, I thought there was, maybe some potential career path that, as a performer, or as some sort of writer, composer,
Mm-hmm.
arranger, something like that. And I still love it. But obviously, found myself in a different
Mm-hmm.
on a different trajectory as most of us do, right? So,
Yeah. No, I mean, look, I mean, I mentioned this. I don't know if you like caught any of those episodes in the past, but I mentioned this a few times.
right.
Like when I was in high school, I was like a musician. I was in a band, and I really thought that's what I was going to do. And my parents were pretty strict, so I ended up kind of going down the technology route, which is good. But like
Mm,
now it's cool because I'm kind of connecting with people in the music industry now, and there's investors in the music industry, so I'm seeing some things kind of come back, which is really cool to see. And you kind of wonder, hey, how would your life be if you did pursue that career? But like, not to like, really drill down on like theater, but I think it'd be interesting because I talk about VC a lot,
right.
and also LPs and institutional investing, but like, it'd be kind of cool to learn a little more about that industry. Like, so the theater Broadway industry, is there like a SAG version of theater, like the kind of like a guild for the theater actors?
Yeah, exactly.
Yeah.
So, right. So there's the film union, and then
Hmm.
there's a union
Yeah.
in New York. I'm blanking on the name. I guess it's been a while since
Yeah.
of course, when you're on the show, you blank on things,
I'm
right?
taking
But
you. I'm taking you back, man.
right, you're taking me back a few years. Yeah, but I mean, the whole thing is,
Hmm.
and it's similar, right? And it's sort of like more like, actors in the pocket of New York, actors in the pocket of
Hmm.
LA traditionally. But yeah, I mean, it's very similar, right? So, you try to get some sort of equity show, right? So it's a
Hmm.
show where the union's involved versus, if I put on a show, it's probably not an equity show. It might be community
Yeah.
theater, et cetera, right? And
Hmm.
so, what's exciting is that if you get on a show, you might be able to get that card, and that's sort of like,
Hmm.
almost your path to get into, I mean, these
Yeah.
productions that are on Broadway, for example.
Hmm.
But it's almost a double whammy. One thing that's interesting is sort of like if you get your card, your equity card, you're sort of no longer able
Hmm.
to do these non-equity shows. So,
Yeah.
again, if okay, maybe I'll make a sort of a connection to venture. It's almost like if you close a nice A round, right? Now you have all this pressure to, to
Hmm.
sort of perform, right? And now you're not just a company, you're also an investment, right? And so, I mean, I think when you get your equity card, it's a little bit like, okay, now you're a little bit more serious, you might say. That's
Hmm.
not the best word to use, but and it's like, you sort of hope you become increasingly attractive, because if not, you sort of plateau, and you're
Hmm.
maybe quite not great enough to land all these amazing roles at the equity level, but you're
Hmm.
not able to participate below. So there's definitely some
So the
pressure there.
equity love, just to unpack that a little bit,
Yeah.
so if you got an equity show, does that mean that you actually get some of the proceeds of the ticket sales? Is that kind of how it works?
So
Like they sell the
so
tickets and then everybody gets a cut?
right. So yeah, I guess it's a little deceiving. So, it
Hmm.
really doesn't have anything to do with that. I think that's just it's just called an equity card. I think that's the name of
Yeah.
the organization or something. So
Okay.
yeah, it's not a profit sharing
Hmm.
mechanism. It's more of just a way of you're in the union at that point, so you can do
Got
these
it.
union shows. Yeah.
Got it. Yeah, because I mean, they have that. That's pretty common in the movie industry. Like, if
Mm,
you're part of the Screen Actors Guild, definitely they call on you uniquely for different opportunities.
mm,
Um, so that's really cool. And I think, look, I mean, there's a lot of like things that circle back if you really, really sit down one day and see how that kind of flows into investing. I mean, a lot of the entrepreneurs that you're backing, there's creativity that's involved in that. And There's sometimes you're acting like a different character when you're an investor, so you probably put on the actor hat. Obviously messaging things in the right way that could be a different. It could be a different way that you normally present yourself to kind of message things correctly. But so you thought about pursuing that career, and then tell me about the kind of like the first pathway after college. Did you go right into venture? I forgot, or did you work in a different industry?
Yeah, so I mean, basically, sort of right place, right time. Wrapped up my last semester. I actually did abroad, so I guess a little background: political science major, but involved in the entrepreneurship community at my school.
Yeah.
Did a few accelerator-esque classes where we ideated and thought of companies that would be interesting to build. So that was like super thrilling. That was lots
That's
of
really
fun.
cool.
Yeah, I know. So it was great. Another
So what's
conversation.
what's one of the companies that you? I did this thing, and I'm happy to share it. I probably shared it before, but like I did this thing called Startup Weekend, and the first one that I went to, that was kind of the first foray that I had, and I thought it was brilliant. It was a lot of fun. Like it built, obviously, like what sucked about it though is like those people that you spent the weekend with, a lot of times like it never really turns into anything. But like the concept of like really actually building something like a hackathon, and actually pitching at the end, that was really cool. But like, what were like some of the problems that you were trying to solve in like some of those, design sprints?
Yeah, I mean, I'd say there were like, a few ideas I had. Some now that are maybe somewhat compelling if done right. Yeah, I mean, I'd say sort of like the one that I think still most interesting is, basically, so I went to school in Charleston. If you're, there's two Charlestons in the US. I think there's one in West Virginia, and there's also one in South Carolina, which is this amazing, beautiful city. But, it's on the coast of South Carolina in this part that's known as the Low Country. And that's relevant because they've just been slammed by floods, in the past 10 years. It's been really difficult. And so it's the type of thing where, during a flood, it doesn't take a lot of rainfall to see some of these streets build up 1, 2, what seems like 2+ feet of water, right? So, we felt like there was a real opportunity to build some sort of application, either revolving around parking or navigating during a flood event. And I still think that's a compelling space. I mean, I'm happy to get more into what we do at IA, but we announced this recently. But we invested in an MGA, so essentially an InsurTech, that's writing policies for commercial flood. So again, the idea is that I think there is this broader opportunity to think about, okay, what's the state of flood forecasting technologies, and what kind of businesses can you build around that? And yeah, I mean, I don't know. I hope that describes it well, but yeah, I still think that's an interesting opportunity.
No, I think that's really interesting. So I did my grad school in simulation, and I think the national. It's funny, like the National Weather Center was not too far from me, and they had all these simulations, like simulating storms and all that stuff. And do you feel that so it sounds like we have good technology now. We can see if a hurricane is coming, but I guess what you're trying to say is we don't know, based on that data and maybe a lot of statistical analysis, if that actually indicates that there will be a flood accurately. We still can't tell that.
So I think that's a part of the piece. I think the other piece is, without breaking down into like, how you might look at it is like, can you get hyper localized real-time data? Right. So with that, that means like not just that there's going to be a flood, not just that, this downtown Charleston is going to be bad, but, can you forecast with some degree of accuracy on a street by street basis what each of these streets look like? In Charleston, if you're new to the city, I mean, you kind of have to know the streets well, know which ones flood pretty easily, know what parts of town are a little bit more safe. And you can see maps of, like what the typography of the city looks like. But yeah, I think it's partly about, can you get this hyper localized data, right? And so there's different methods to do that. I mean, some use hardware sensors. Other companies are using different data points. But yeah, I think it's an interesting interesting opportunity.
Yeah, and we talked about this for a while. Like I think when we met in person, I mean, because I think I don't know if you remember, but like I was in the InsurTech vertical, kind of looking at
Right.
that, and I guess another data point could be satellite data, but that's not really real time, right? There's probably like a 24-hour latency or something like that.
Right. Well, no, I mean it's useful, right? Satellite, geospatial.
Yeah.
I think
Hmm.
it's again, I think on a from a high level, I think that the
Hmm.
companies that succeed in this space, are probably finding ways to weave all these different
Hmm.
data points together. They're
Yeah.
diverse often, and
Hmm.
essentially come up with something meaningful, right? So be able to tell some sort
Yeah.
of story in real time that's useful, right? And so, yeah,
Hmm.
from a high level, I think there's lots to include.
Yeah, so just kind of having better possible prediction and just kind of stitching all the data together to just think about storms. But then the other piece is, a big part of insurance, I would say, is arbitraging the claims, right? Because that's really, and you probably know this better than me, but I'm assuming like insurance companies, the liability or the risk is if there's like too many claims and they can't underwrite those claims, right? So there's kind of everybody paying a premium. So there's revenue coming in from paying the premium, but then if an actual incident occurs, people are going to be claiming to be able to get compensation for that damage. But if it's kind of like the gym model, right? Like I mean, you're still making money even if people don't go to the gym, and that's the
Right.
same thing with insurance, right? People will pay for insurance. Because they want to they want to sleep better at night, they want that coverage, but the moment when something actually does happen, then they have to all make claims. So
Yeah, I mean, I think I think two things. One is, I think that's why it can take time
hmm.
to really vet an underwriter and their ability to underwrite, right? I think there can be
Yeah.
tough years,
Hmm.
right? And so I think you have to look from a longer term time
Yeah.
horizon to assess the quality
Hmm.
truly. You know, not 1 to 2 years, but something a little bit longer, right? So
Yeah.
maybe 10, right? And
Hmm.
I guess the other thing is, so I think that's what makes climate as like sort of an emerging risk category, whether you're,
Hmm.
investing in companies, writing policies or, otherwise interesting, right? In our portfolio, like I said, we have the flood insurance company. We also have,
Hmm.
a company that's underwriting for fire risk. And,
Hmm.
those categories are interesting because, like you said, I mean, these are events where if you have a wildfire, it's not like a car accident where, in most cases it's one or two or three or four
Hmm.
cars, right? It's, with a wildfire, it's a small town, right? Or it's a
Yeah.
region, right? With a flood, it's sometimes like a peninsula that's damaged,
Yeah.
right? So, that these are, interesting for that reason, right?
Hmm.
So,
Yeah.
yeah.
What are kind of some of the, and maybe you can give a quick overview on IA Capital with the
Yeah.
thesis on insurance, but like I'd love to maybe get an overview of IA, kind of what you guys are excited about. But then just it's been several years since I've gone really deep on insurance. I was really passionate about it a while back, but I just feel like I'm behind. So I'd love for you to kind of help catch all of us up on like kind of what are the emerging trends in insurance tech. There's property and casualty. There's yeah, I guess maybe you can break those down. There's homeowners insurance, all that stuff.
Right. Yeah. Sure. Happy to do that. I guess, first thing there, IA Capital, IA stands for Inter Atlantic. So we've actually been around for 23 years, with our
Hmm.
venture funds. Um, you know, Currently I've sort of our ninth fund that we're actively investing from.
Hmm.
Um, but yeah, so IA stands for Inter Atlantic, and the reasoning behind that is because sort of the three insurance capitals of the world we see as being New York, Bermuda, and London. So Inter
Yeah.
Atlantic is in some ways this connecting agent.
Hmm.
That being said, we invest largely in the U.S. At the Series A stage. Most of the time, I think that's an interesting place because you're still investing in these companies that are quite early. There's significant potential upside, right? A lot of space for growth, but you also have some metrics to look over and some traction. Some revenue that is meaningful, right?
Hmm.
And so I think that's a really exciting place to be. I really do. Um, yeah, and then one thing that's maybe a little bit unique about us is stepping back. Maybe I should have said this earlier, but we're focused on insurtech, like you said, but also fintech. We have
Yeah.
sort of a deep experience in the payment space as well, and have a
Hmm.
a track record that I think is pretty impressive there. But sort of within the past 5 or so years, we've been investing capital strategically on behalf of insurance carriers. So we
Yeah.
have about 20 carriers that we work with,
Hmm.
that are our partners. And yeah, so I think we're very deeply engaged with the insurance industry as well, and sort of have that very unique touch point into the industry with these carriers. Um,
Hmm.
so that's a little bit about us.
Yeah.
I'm not sure if any other areas to add color there, but otherwise, yeah, happy to talk about
Hmm.
and engage about like what's exciting, and maybe some lessons in insurance that maybe have been in insurtech specifically that
Hmm.
maybe have been learned over the past couple of years. Broader outlook. Yeah, happy to
No, that'd
talk
be
about
valuable.
that.
Yeah,
Yeah.
that's actually going to be really helpful. I think really understanding, obviously for the broader audience, how do you guys think about insure tech? How do you guys categorize that? And then maybe just kind of like unpack the universe of insure tech, the different types of um, verticals that are getting impacted, maybe some of the players and then how, maybe, yeah, so maybe just stepping back like the universe and then kind of share with us kind of like how you guys are looking at it and your thesis around that, like maybe the areas you guys are focusing on.
Yeah, that's great. I mean, this is at least my personal perspective. I think
Hmm.
there's many ways to break down insurtech, right? Which is just like fintech, right? It's just an abbreviation for insurance
Yeah.
technology, right? So
Yep.
what's interesting is traditionally these insurance carriers, they're even slower to move than
Hmm.
the financial services players, right? So if fintech was coined, I don't know, roughly 10 plus years ago, insurtech was really only coined within the past, let's say, 6 or so years
Yeah.
is my guess, right? And I think there's many ways to break anything down, but
Hmm.
in terms of like what we invest in, I think there's sort of three ways to look at it. I think or three categories to obviously break down. So I think the first category is basically a technology enabled um, full stack insurance like companies. And so, a very common strategy there is through the MGA model, which stands for managing general agent, where,
Hmm.
basically you build a company, and, you're set up in a way where, you're underwriting the risk. You may or may not do distribution directly. You may work with partners instead for distribution.
Hmm.
But, you're partnered with these carriers that are, licensed on the state level, and that
Yeah.
also sort of hold this risk. And you'll also partner with reinsurers generally who also help carry that risk. So that's been a popular model. I'd say the second thing is, I think you could call it point solutions, right? So in our portfolio, I think an exciting example is Snapsheet, which if you're familiar, I think we might have talked briefly, but
Hmm.
basically it's a claims management solution.
Yeah.
Works with some exciting customers. One of them is ClearCover, and so basically, it's an app that it can be white labeled and integrated, but
Hmm.
you take a photo of a car, that
Hmm.
claims process uses AI to process the
Yeah.
visuals. Um, you know, so that's an example of that. And then on the third, I'd say really looking at distribution, marketplaces, etc. So you know not writing policies, not building these point solutions, but
Hmm.
just focusing on how do we get the right policy in front of the
Yeah.
right customer. So those are the three broad categories, I'd say, of,
Yeah.
of insurtech.
No, that's really helpful. And, I think when we were chatting, there, to your point about the insurance industry being such a legacy industry, there was a company that I looked at and it was super innovative. Like it completely removed the human using AI. And then the technology actually ran AI algos offline as well, because sometimes when you're trying to focus on this insurance application, you just may not have internet. but the founder and the technical team was so brilliant that they were able to kind of like use your phone and run models on the device. So it was like all essentially edge computing locally on the device. It was super innovative. It didn't require to need humans, and they proved that it worked. But the biggest issue, and you probably see this a lot, is just the carriers don't really care. Yes, this is interesting and it's so innovative. They'd rather just pay for humans to do it because it's just more work to kind of integrate that solution, and it's just going to slow them down from taking in more claims. So they haven't really focused on corporate strategy, corporate innovation to really reinvest strategically into the company. And I think that's a really great position for you guys to position yourselves to kind of augment some of those larger insurers and say, look, you know what? I know you don't care about it. I know it's not going to help, but look at this model that we built. If you integrate this could probably save you 50 million a year. And I think sometimes it's just they don't have time or the bandwidth to care or make it a priority. But I don't know, like, and that was like a while back. And now with, the advancements in AI, I wonder if it still doesn't really matter, because of just kind of the legacy nature. And obviously there's bureaucracy and hierarchies in a lot of these insurance companies too. So that could also slow things down. But have you seen, I guess my short question is, have you seen AI start becoming more adopted with a lot of these legacy carriers and having them create more use cases to maybe automate the claims process?
Great. I mean, broadly, I think claims is a really interesting space. I think it's exciting, and that's definitely something I want to continue to dive into.
Yeah.
But I guess I would take a step back and say, I think it's interesting. I think this isn't unique just to insurance carriers, right? I think any institution, is by nature of being large is going to be less nimble, right?
Yeah.
I have a friend that works for a large tech company, right? And was at one point at a startup, building a very exciting product, and the benefit there is you build something and you can deliver it tomorrow to you can at least actually go to market with it as soon as you feel like something's good enough, right? But you work at a large tech company. If you decide to distribute it, right, and maybe there's already sort of distribution, very nice, clean distribution funnels, right, like at a Google or at an Apple, right? You can do it tomorrow, but the stakes are way higher. And so I guess the point is it's like the big tech, right? They have much more to lose. The insurance carriers have much more to lose. These startups don't. And so I think it's always going to be the case, and I think it's part of the reason that it's an exciting place to sort of spend your time is. I think it's always going to be the case that these younger companies are, these startups essentially are going to be, assuming this risk and trying something that, in most cases won't work as well as expected, right? In some cases doesn't work at all, but in some of those exciting cases does work really well, right? So in terms of AI, I'll be honest, I think that's, I think my comments there would be somewhat superficial. I think it's obviously that's a space that's blowing up, sort of with the generative theme, and my broad take is I think that there's some exciting stuff, but I don't think anything's changed overnight. Let's say recently. But I mean that's my broad thought there. Not sure.
No,
I
think that was really helpful. I think the generative AI landscape could definitely help with some of the creative industry, even the writing industry. People may start to use it to augment workflows. And like my takeaway on generative AI is a lot of times if you're an engineer or you're a writer, you're actually generating first, and then you kind of optimize the code and you're reviewing it. There's code reviews. So you could spend less time on kind of the generative part, which could be mundane, and like you're still the creative person telling what to generate, but like after that you're kind of QA testing it, making tweaks So you're still generating, but you don't have to do perform the labor that it normally takes, whether it's like, 1,000 lines of code to build, a web app. You kind of have the vision of what you want to build. And I think that could enable some low code or no code possibilities. I mean, it's available now, right? So in Chat GTP, if you,
Right.
what I've heard, I haven't played around with the code development stuff, but I have a developer that told Chat GTP to build an iOS app, and the code was already generated. And then obviously, he probably had to go in and debug it and review the code. But that's much less intensive than actually having to generate it from scratch. So I think it could augment our workflows. There was an article that I read a few years ago, and I still think it's relevant. I think people were afraid that AI is going to take away everybody's jobs, but there's just you still need someone to maintain the AI. So there needs to be a job created to still kind of like make software updates and tweaks to the AI. So that job that it took away, it still creates a new job to kind of maintain the AI. And after they looked at a bunch of data, the AI actually really was used more on the back office processing to just mainly automate stuff. So, normally if you had to kind of like manually have a worker take like an Excel document and like cut and paste it and put it somewhere, it would just kind of have a script or some robotic processing automation to kind of skip like 5 to 10 steps. So I think there could be some interesting like data automation or robotic processing automation for like the insurance industry, and even in the fintech industry as well. But I don't see like I don't think trades on the fintech side are going to completely be synthetic on their own. I think it still needs to be somewhat supervised because there needs to be some type of like probably some type of thesis depending on like what asset class you're looking at. And then on the insurance side, I've seen technology that can read some type of images and like detect damage and actually push through a claim. And I think I'm not sure if that's completely automated now. You'd know more than me, but I've seen, right now it's like, you take a photograph and then there's actually a claims adjuster that still kind of manually reviews it for QA quality testing. But some of those, like some of the human tasks that are kind of mundane, I feel like some of those could be augmented with like a script or like a detection mechanism, I would say.
Yeah, I mean, I think I couldn't agree more broadly. I think, yeah, I mean, what's exciting there, right, is, and again, I think we're in a space where it's like, we've seen some exciting, what appears to be jumps forward recently, right? And, I think it's like, there's augmentation that can happen, but you still need sort of that human supervisor, right? Over in many cases. And, I mean, I think, every case is different, but, obviously what's exciting is sort of at scale, that can propose some interesting business ideas, right? Some interesting business models, right? I mean, also just an interesting thing you said about the whole, AI taking our jobs type of thing. I think it's a fair concern, but I feel like more than anything, new economies I think are generally built off of technological advances that in the long run create, I think a more exciting, dynamic, diverse, system of like economic interactivity, right? But I think that, there can often be some shorter term, pains, right? And so like, if you think about the Rust Belt, right, in the US, right, where, we used to manufacture a lot of things, here, and then we sort of offshored a lot of our manufacturing and, the job, right? It used to be you could, if you're growing up in, what was it, Cleveland, right? You could sort of just 22 go down to the local factory and get a job. And, I mean, Detroit, cities like that, where there used to be historically a lot of, manufacturing, right? I mean, again, I mean, that's, part of that's offshoring, part of it's technological changes, but, more than anything, I don't think it's a long-term issue. I just think, one thing I'm actually curious about, and, there may be an insurance overlap is, are there, solutions, programs, companies, et cetera, that can be built around this idea of, helping to reduce some of these shorter term pains that happen when, AI does, and
Hmm.
again, I think it's not a straight line. I think it's, an up and down, a back and forth, 2 steps forward, 3 steps
Hmm.
back, type of thing. But that can reduce and offset and mitigate some of these shorter term pains and disruptions is interesting, right? And I think you can only go so far with sort of government programs, et cetera. I think there's probably some exciting opportunities to build around that sort of domain.
Yeah, recently there was I don't know if you read this, but there was a founder in the Valley that created, I think he went to Stanford, but he built this technology that detects AI, and and I'm just kind of googling it now.
Yeah,
There's some organizations that are anti AI. There's like, well, I guess there's one company called ArtStation that's hiding images protesting AI art on the platform. So I think
mm,
that's going to continue being an issue, like, just people wanting to know that, maybe an ad was written by AI versus a human, although, oftentimes you probably can't even tell the difference. I think that might open up more jobs, some auditors and some new departments. It could even open up some government departments. So I feel like things don't ever really go away. I feel like those Uber drivers that can't drive Uber anymore because everything's autonomous, they'll probably evolve into some trade, and hopefully Uber has some type of trade school that like takes those people in and helps them actually support the ecosystem, maybe kind of skill up and build some tech skills or like operational skills, or like dispatcher skills, I guess, to kind of support the robots doing that stuff. But I feel like they're, with jobs getting taken away, it kind of opens up new roles. You don't see people upset that there's not a blacksmith role anymore. There's technology that can create a sword, with a machine, more precisely. So I think it'll just kind of evolve, and people will always kind of have to skill up in some way or the other. So.
I think it's,
Hmm.
well said, right? I mean,
Hmm.
the only blacksmiths I know are like on that show where you have to, what is it like, build the best sword from Persia, whatever, right? I forget what it's called, but yeah, I mean, I think it's just sort of the way of so advancement in society, right? And the way
Hmm.
technology moves that forward, and it's not like it's all positive, right? Like there's
Hmm.
difficult parts, and there's parts you lose. I think part of the solution is like you crystallize those things and you hold on to them, and you sort of call them like art almost. I mean,
Yeah.
I think it's great that there's like state supported opera, for
Hmm.
example, like in many
Yeah.
places in the world, but I don't think that protesting is the right solution. I think
Hmm.
broadly, accepting and thinking of how to iterate around sort of, the changes is probably
Hmm.
the best
Yeah.
way.
And one thing I want to talk about too, I think this could be helpful
Yeah.
both for people who are trying to break into VC. I know I do some content around that, and but I think it'll also be relevant for possibly emerging fund managers and maybe mid-level VCs. Maybe because you're a little more involved in the tactical operations at a venture fund. So like, how can VCs that are starting out, maybe they break in, they just get started, they drink from the fire hose, they're sourcing, they're screening, they're bringing deals to the Monday partners meeting. How, what are some things that you've seen that have helped these team members evolve? Like what's helped them kind of develop in a sense of like a good investor? And maybe you can share in your opinion what a good analyst or a principal is. Like what does that really mean? Like does that mean that most of the deals that they source and screen end up going to investment committee, or are there other things just kind of from your day to day, right? That's stuff that a lot of people don't always see. But I guess the question is, to kind of keep it simple, like how can people what are some things that you've seen that helped, that shows that people are improving and evolving as better investors?
Yeah, I mean, that's I think full disclosure, that's a question I think about most days. I mean,
Yeah.
I'm fairly new. But yeah, I think there's a few interesting, things to
Hmm.
consider. I mean, broadly, let's just look, set the stage here. I mean, working in ventures is interesting because, this is one of the first things I heard from sort of a friend slash mentor of mine, right? It's interesting because, in many careers, there's sort of like, to some extent, like clearer metrics about how you're doing, right? I mean, if you're a banker, it's like, you close the deal or you don't close the deal, right? If you're in
Yeah.
sales, you spend half your day thinking about, are you hitting your
Yeah,
targets or not,
there's
right?
clear numbers, right? It's like, look, did I hit my numbers or not, right? And with
Right.
VC, you're not, it's with VC, right? I would say like if you have a fund, there's a certain amount of checks that you can write for a certain size within the vintage of the fund. So that's also a constraint.
Right. Yeah. So, I think I mean, my philosophy is I think it just comes down to, a few things. If you're thinking sort of how to operate successfully within a fund, especially at these smaller funds, right? I mean, you
Hmm.
are an investor, but you also communicate with LPs, and you also, manage a few things internally and
Hmm.
make sure the team works well together. Um, the point is, there's like various things to do that are not related to investing necessarily in a direct way, right? So like
Hmm.
administrative, et cetera. I think broadly a good thing attitude to approach is try to, as someone that's starting out at a fund, try to think about how you can make everyone else's job easier, and really provide sort of value to other people that you're working with. I think it's great to think about ways to be creative there. So something I'm thinking about more and more
Hmm.
is sort of that aspect, right?
Yeah.
In terms of you know how to become a good investor, and how do you know that you're on track, what should you
Hmm.
think about for maybe your first year. I think it comes down probably to just thinking about sort of what principles you like guide you, right? Because if you don't have clear metrics and obvious feedback, right, you better at least have some sort of sound, well thought out philosophy for the way you approach things, is my thought, right? Because
Yeah.
if things, if certain things don't work out, which for everyone that will not, in venture, right, like it depends what stage you are, but broadly you think about a few companies returning the whole fund, right? If
Hmm.
you invest in 10 companies, five might, this is, let's say, average seed stage, five might not make it, right? So um yeah, and I think broadly one thing that's also proven valuable is it's very noisy. Like that's one thing I realized, like,
Hmm.
started out in college, I was like so excited to have an idea, and it's not that ideas are worth nothing, but they're fairly cheap is a way to think about it. And so
Hmm.
I think one way to sort through the noise is, and I'm maybe lucky in this sense to be at a sector specific fund with some great resources and connections, but I think it's probably to spend lesser time on fewer things. This is probably a broader, probably valuable. Because there's also principles you can extract from things that are seemingly unrelated, right? That over
Hmm.
time that can really accelerate your growth. So, maybe there is a certain legislative act that was enacted this year, and maybe
Hmm.
you think that provides massive tailwinds to a certain type of solution. And so maybe that's reason to spend, a couple of months mapping that space,
Yeah.
meeting with people that work in legacy companies at that space that might want to acquire a startup in the space, or maybe in some ways are competing.
Hmm.
Speaking to founders in that space, reading as much as you can about that space. I think that's probably something I'm trying to adopt, is again spend lesser time on spend more of my time on fewer
On
things
fewer things and
versus
just have much more
yeah.
focused approach.
I think so, yeah.
Yeah. What are some KPIs that like analysts should think about as they're, evolving? You probably have a lot of peers and colleagues at other funds that you chat with. So like, what are they thinking about in terms of like, hey, you know what, like I need to, is it, one person that I met that was pretty young at a fund, they're really, really approaching it at a volume game too. So obviously, you need quality, but if you only bring in one deal, it's tough to kind of really synthesize a lot of data points. So it's kind of a little bit of both, right? It's kind of like talking to as many companies to kind of really understand the ecosystem and understand even what maybe a competitor is doing or maybe a similar company might be spinning off of. And and then still bringing in those high quality companies to like a partners meeting. Um, but are there any other frameworks or just best practices that you think could help people like as they're in year one or year two, especially like with the maybe the and the reporting structure always changes with different firms, but I'd say sometimes like there's maybe a principal that's running the partners meeting, but like I guess maybe what are like some of the basic best tips that you would give? And I know one thing you said was kind of make things easier. So there could be maybe like streamline processes to maybe streamline the partners meeting. Maybe you have like a high level overview or like a matrix or something like that. But any tips you have, that'd be good for the community, for people that are just starting or just trying to think about this as a career.
Yeah, I mean, I think, it's funny. Yeah, I mean, I've definitely thought about this a fair bit and have heard from different people, and in some ways, I've heard conflicting things, right? And
Hmm.
I think the reason for that is I think you should consider first of all that every fund is really different, right? Some
Yep.
funds have been around for a while, some have not. Some feel more pressure to fight to get onto the good opportunities. Others,
Yeah.
sort of are a little bit more entrenched and have have to spend less energy
Hmm.
fighting to get on, et cetera. And so, there's different workflows. That's a big thing. And so, I would say sort of it's first of all important to be responsive to, the way the fund works and to consider that, right?
Hmm.
I've definitely, at a fund I was at over the summer, for example, I did sort of an internship at a fund, a newer fund, before joining IA, which is fairly tenured, and I'd say there was probably more of a focus on sourcing from the get go, and
Yeah.
I think that's fair because I think the fund was newer and wanted to spend more of a focus on sort of getting out there, meeting with companies, and you know
Yeah.
um, but so I guess everything's really different. But from a
Hmm.
high level, just to break down thoughts, I think I would say it's more valuable to become really good at a few things that maybe have the chance of providing value to the fund versus trying to be a generalist from the get in most cases. So I would encourage
Hmm.
everyone probably to think about a few ways where they can become a little bit differentiated in their expertise. Um,
Yeah.
and yeah, then I would encourage also just to be a team player. I think
Hmm.
those are sort of two principles that feel important. And the third, now that I'm thinking about it, is I think VC is largely I mean a lot of these sort of private equity roles too. I think are largely relationship driven, and so I think thinking of ways to connect with others while hopefully providing value at the same time, I think is important. I think that's something that, especially over time, I think you'll probably feel is a good investment if you approach it in a sound way, in an honest way, less transactional, more about, I think, connection and just providing value. I think that's to
Hmm.
others, I think is, it always catches everyone's attention, right? Because everyone's busy. So I think few people everyone's nicely surprised when
Hmm.
someone goes out of their way to provide them with something that ends up being useful and makes their job a little bit easier, right? So I'd
Yeah.
say those are the three things that feel important to me right now, and definitely revising them as I continue to
Yeah.
explore.
Yeah. We're all still growing, no matter what phase of our life or our career we're in. And one thing that you said really hits home too. This actually brings up a story that I heard over the holidays. So really, kind of identifying and knowing what your principles are, aka your values. So if you value carrying yourself in a certain way with a certain level of integrity, a lot of times that might be you might be forced, depending on your situation, to kind of like stray away from that. So there was a fund manager that um, potentially had a large allocation, like a large anchor investor coming in, but but there were some strings attached to that anchor investor, that anchor investor coming in, and that and I'll probably have to just tell you this like offline because I don't think I can
Sure,
talk
sure,
about it
sure.
here. But like the terms of like that anchor investment would have really tarnished the integrity. It would have forced the GP to do something that would stray from like their values and those guiding principles of like what formed who they are and like what they believe. So they ended up like not taking that check, which obviously it's good and bad. It sucks that, especially in this ecosystem, you're trying to raise money as a VC, but at the same time, at least you're not questioning your guiding principles. So I think that's just really good, like fundamental life advice. Like, try not to lose track of who you are. Some of us are fortunate to kind of like have some of those values as kind of like our from our parents, but we all come from different backgrounds. So I think that's definitely really good advice. And then I think that'll flow into kind of like what you said later on, which is like, building those relationships, connecting people, and just adding value as a whole. So really appreciate that.
Yeah, I mean, I think, not just for venture, right? I mean, I think
Mhm.
absolutely general life advice, but again, I mean, and many people, stay in careers for their entire lives, right?
Yeah.
Whether you're a lawyer or an engineer, I mean, there's many people that, venture is not exclusive, but in this
Hmm.
way. But one thing that's interesting is again, it's really not this short game. It's really this long game where the time horizons
Yeah.
are, 5 to 15 plus years, and
Hmm.
so it's almost ever more incentive to, be extra guided by principles because often principles lead us to do the right thing that might return the thing 15 years down the line, right? At
Yeah.
the cost of the short thing that gets us the quick win.
Hmm.
But if you're in venture, you're playing for these 15-year plus, 10 to 15-year returns anyway.
Yeah.
So, um, you know,
And like my lesson too, I mean, like you just learn. I would say like every year there's just there's two or three cool nuggets that you take back. And just one big thing that I've just seen over the years is like, you just never know where somebody's going to end up. So like, there could be somebody that like, you're like, oh, who's this little kid? I'm going to write them off. They're like a founder. And then this founder essentially could be like an institutional LP, and like maybe you end up like being in a room with one of your friends who's an institutional LP, and this institutional LP is like, hey, you really should meet this person, and that person, someone that like maybe didn't help or like didn't support. So like, and you really start seeing it like over time, right? Like over a lot of people like really evolve as people and like they change careers, and with how luck is, that person, anybody could be your boss at some point, right? So like you never know, like that person that maybe you were mean to, or maybe it's the same way, like that person disrespected you and then you could be like their new manager or something. So I've seen that happen. Again,
yeah,
I have some crazy stories that I'll probably share with you like in person,
yeah,
but
we'll
like
we'll share some
that's
stories
happened to me.
offline for sure.
Yeah,
No,
absolutely.
I mean, I think everyone's gonna have those. It's just a question of how significant it is, right? So,
Yeah.
I mean, a small thing for me, but it turns out that my entrepreneurship professor from college, his son is also involved in sort of fintech in the fintech space as
Yeah.
an investor, and so it's stuff like that where it was like
Hmm.
I was happy to have done well in that class because it made
Yeah.
it easy to connect with his son, right? So,
Yeah.
stuff like that, and I also think at the end of the day, you mentioned the word respect, and I just think that has to be
Mhm.
an absolute, I think, in the way you operate. I just think
Yeah.
there's no way around that is my thought.
Hmm.
I think learning to treat people with respect, whether it's
Hmm.
through agreement or disagreement, is sort of fundamental.
Yeah.
So,
And I would say mentorship comes like upstream and downstream, right? So I think old people, I mean, I'm not just trying to like be ageist or, what define what old is, but we all feel a certain way. Like, we could, I think you're old when you feel you're old, but I feel like in general, like you can learn from experienced people and then you can learn from very new people, because the newer people, the younger people, like they have a lot, they just know about all the really cool tools. And then I think the people that have a lot of years of experience, they just have really good people skills. Like they probably definitely gone through some very challenging times, and some of the younger people might just not have like lived through that yet because they're just starting their career. Where like the people that have lived longer, they probably have like they probably have developed some mental framework. So for me, it's important to like learn a lot from very experienced people that have done things for a long time, but also stay plugged into people that are smarter than me and, definitely even younger than me, because they just probably do things much more efficiently, and skip many more steps, with the same outcome. So try to be
Yeah, Joe, I
respectful
really
of that
love that.
too.
I mean, I think you can't write anyone off. I think,
No, you can't.
you
Yeah.
probably have something to learn from most people, and some of those things are going to be very valuable to you
Hmm.
potentially. So I
Yeah.
love that. I think that's.
Hmm.
I would say too, if you're networking, right, as an investor, don't just invest in building relationships with the principals and the partners, but
Yeah.
think about your class too, or even the people below you. I think
Yeah.
is right in line there.
Yeah, and I mean, a lot of times too, it's like, I show this to a lot of people. Like, a lot of times, it's the analyst that's usually the first line of defense, like, that's doing the initial sourcing, and like, they're the ones that are going to probably be there cheering your company on, and like, pounding the table with conviction, saying, "Hey, you know what? This is an amazing founder." So those are, even though they're not like the final person, they're like probably the first, second, or third checkpoints, to follow through on and pass before you even get to like maybe a final decision. But anyways, this hour flew
Yeah.
by, Richie, and
Yeah, completely.
enjoyed chatting with you. And thanks for being generous with your time. And we'll catch up soon.
Hey, it was great to be on. Thanks a lot, and look forward to hearing some of those stories offline. So
Yeah, definitely, man. We'll catch up soon, and have a good
great.
rest of the week.
You too. Take
Yeah,
care.
take care. Bye.